Hi, Mark Anderson here, mortgage banker at Paramount Bank, updating everyone on what's going on with rates today. I do lend in all 50 states, so if you'd like me to take a look at your loan options, I'd be happy to put together a quote for you. This is kind of a tough one because the last 2 days have been, I would guess, probably the most volatile 2-day period in the mortgage bond market maybe ever. It's hard to convey the sheer craziness that is represented on this bond graph. These are the bond prices over the past 2 days. Suffice to say that this is not normal. The swings in terms of both the relative size of the swings and the actual, like what those swings mean in terms of dollars and price on these bonds is just unbelievable. Over the course of the last week, we saw rates in a lot of cases that were in the low threes, let's say, on average, to rates easily in the fours. We had government pricing for like FHA loans, VA loans, et cetera, go as high as around 4.5%. Now, from a compliance standpoint, I need to make clear that those are not meant to be quotes. I'm using those figures illustratively to just give you an idea of the scale of all this. The good news is, I delayed shooting this video until we hit this afternoon because there was some rumbling that basically the Fed was going to be, let's say, very, very active with their bond purchasing programs, that they were going to be injecting a huge amount of money into the mortgage bond market to stabilize things because the price increases on rates, and rather the prices on the bonds going down so much, made the Fed, I guess we'll say, nervous. But the good news is this. The rally in the mortgage bond market has taken place. For the past couple hours, it's been relatively sustained improvement in the bond prices. The big question, as it's been since the beginning of this rate craziness, when we first saw the rates go down super low earlier this month, the big question is always, well, what does tomorrow bring? I will tell you, over the last couple days, there is nothing from an understanding of the fundamentals. There's nothing from a macroeconomic perspective that is going to give really anybody any amount of legitimacy to predicting what this market's going to do going forward. I am heartened to see the improvement in the bond prices today, and I certainly really hope that translates into dropping these rates back down. But this week has not been good for rates. Now, I will point out that there's a chart here. This is user-generated data, so it's basically loan officers from around the country let people know what's going on in terms of price changes. And the price changes that we see nationwide, it looks like right now 48 lenders have made their pricing better from their original rate sheets this morning, and 5 made them worse. My guess is that 5 happened in this interval here. We had a big drop-off in bond prices at about 10 a.m. Eastern time, and that's my guess for where those negative price changes came from. All of the positive price changes are happening over here. It looks like by about 11 o'clock Eastern time, there was an improvement that turned into a big old spike, and we're seeing actually sustained price improvements in the bonds through the rest of this afternoon. So if you are facing the choice of whether to lock today or not lock, with as many statements as far as don't take this advice to be backed on any sort of true understanding of what's going to happen in the future, my bet, if it were me, I would not lock today, and I would hold out for more favorable pricing next week. These price changes, however dramatic they've been over the past couple days, most of the time what happens is a cyclical back and forth as the market tries to find where it's supposed to be, where the bond prices come up, rates go down, bond prices go down, rates go back up, and it's going to cycle back and forth. That's what happens most of the time. So hopefully what we're seeing today is a push toward lower rates next week. I'll be very interested to see what happens. But that's what I've got today. Again, I'm happy to take a look at any of your scenarios. I can put a quote together for you very easily. You can give me a call or shoot me a text at the number below. Thank you very much for watching. please like and subscribe.